Hi traders, and welcome to my video on the dead cat bounce pattern. In this video, I'm going to show you how you can capture moves such as this one for over 500 pips. Okay, despite its weird name, this is a very powerful candlestick formation that you can find on your charts. We're looking for in a bearish trend. Okay, there's no guesswork here. We know that we're trading with the trend and we're going to try and enter on the ideal opportunity. So the first thing to look for is a trend in market. Okay, you can see clearly here, if we zoom out, we've got a very strong downtrend on this is the Australian dollar, Japanese yen, AJ 1 hour chart. I'm using the MT4 trading platform. You can actually look for this particular candlestick formation on any trading instrument, Forex stocks, cryptos, commodities, indices, etc. Any chart time frame. I personally like to use the 1 hour charts and above simply because they contain more price data and therefore I find the signals tend to be more reliable. Okay, and it also means less time chart watching, right? So enough waffling, let me get to the point. We're looking for the downtrend. So here's the downtrend, clear as day, okay? And a dead cat bounce, what we're looking for is a significant pullback into the downtrend, okay? Some traders say, oh, it's got to be 50% of a pullback. I don't think there's no exact science to it. I mean, any obvious pullback by looking at the charts for me is a goer. Here, let's just say we're looking at the chart as is. We've seen this trend, we've seen this level of support formed. Okay, price is reversing away. This is the dead cat bounce. Okay, so downtrend and boof, the cat bounces off there. With the dead cat bounce, what you look to do is to enter on the continuation of the trend. Okay, so there's a few different ways we can do that. The basic way is to mark the support level where the cat bounced from, which is here, and then trade the breakout. As you can see, this support level then becomes resistance and price continues downwards. This would have been an easy entry using this particular setup. And not a bad entry at all. Let's just see. I mean, over 1,000 pips. Not bad at all for a couple of weeks trading. And this is a good thing about the 1 hour charts. You can capture big moves such as this without needing to chart watch and stress yourself out fighting the 5 minute, even 1 minute charts all day. It just makes life a lot more easier capturing big trends. And the dead cat bounce is a good way to enter into said trends. Initial stop loss I would place above the high, so around here somewhere, the recent high. If our entry was here on the breakout, stop loss will be up here. And then as soon as price drops, I'd move it to break even. Then as price continues falling, I'd be trailing the stop loss above recent highs, okay? And that does mean when there's such a pullback, there is a good chance that we'll get taken out. That's no problem. We can close part of the position and let the rest of the position run. Okay. And you also have the opportunity to re-enter. That being said, back to the dead cat bounce. This is another pullback. Okay. So we have another dead cat. Sorry, Granny. Another dead cat here. Bounce. This is the retracement, the dead cat bounce. Okay, so trend down. One dead cat. Another dead cat. Pullback and a breakout down here. Ideally, we'd want to get in earlier on this trend because we don't want to end up selling too low. But still, nonetheless, a good entry around here on the dead cat bounce. You see this entry, if we're going to be honest with ourselves, it wasn't the ideal breakout. I mean, you can see it had a breakout, then it was tested again. Okay, the balls did go above, broke out again, and then this level did hold up as resistance here. So there are traders watching this particular formation. That being said, you don't always need to draw your support lines horizontally flat. I mean, so you can do it just like that. That's how I'd be looking to take that breakout there. And you can see from this big candle down, probably quite a few people were watching that particular setup. Okay, let's have a nice broadening pattern there, and the breakout down there, that could have been a nice earlier entry on that trade, and still hundreds of pips to be made. So if we go back to the initial dead cat bounce entry, which was here, like I said, just to repeat myself, downtrend, bounce away, so basically the pullback, reversal, whatever you want to call it, and then draw your support level in and look to enter on a breakout of the support level. Again, big breakout candle there, ideal opportunity, and we have a lovely place to place our stop loss, which is just above the recent high there. So yeah, good entry there. Just for double confirmation, we had the lower highs as well. Okay, so that would have been a good signal to indicate that. I mean, if we were in real time, even if we were here, okay, you can see this support level, we've got this resistance level, and price breaks out here. This support then becomes resistance here. You have some nice bearish candlestick formations there. Lots of ample opportunity to get in on this particular trend with the dead cat bounce. Going right back to the start, I mean, some traders may argue that this is a dead cat bounce. I'm going to disagree, simply because this big candle down here, can be a fluke, can be a one-off, could have been a major news event, could have been NFP and non-farms payroll day, first Friday of the month. It's not, because it's on the 11th, but basically this candle doesn't, for me, say, oh, we're 100% in a downtrend. There will be instances where this happens and then price picks back up and goes up in the trend that was before. Okay, that being said, if you want to see this as a dead cat bounce, same principle, price breakdown. And again, this is just emphasizing not an ideal. Yeah, well, to be fair, it would have been, if you entered on this breakout here. Or if you just want to say that that's the support level there. Still, a potential entry. I just would prefer to have my trend confirmed first. So I'll say disadvantages of this particular, there's a nice M formation now actually while we're here. See that M? Okay, so that would have been a good fact up there, I would have said. See that? Nice breakout there to the downside. That would have been one way to get into this trend. It's actually nice wedge formation form there as well. Okay, so yeah, the one disadvantage I say about this pattern is it can be open to interpretation. Okay, we pick this as the dead cat bounce. If I just go back to the trend line, come on. If we just go back to the trend line, all right, we said this was the bounce. There may be other traders who may have been watching this. Zoom in, they may have said, well, actually, either the first one that we just spoke about was the bounce, or, this is the bounce. This is the bounce. I mean, it's open to interpretation. At the end of the day, you're just looking for a pullback into a trend. Okay. This is the bounce. Well, you can see that would have been a decent entry. I mean, I would have taken that even if it wasn't a dead cat, simply because of this one here. See this area here? Even if this wasn't a dead cat bounce, it's still a good entry. And why is that? I'll tell you why. That's because this level of support, look how many times it's tested. Bearing in mind, this is a 1 hour chart. It's got to be at least 10 times this has been tested. And look how significant the breakout is when it does occur. Yeah, so you don't have to wait for a dead cat bounce. That's not the be all and end all of, oh, I'll only take a trade if it's a dead cat bounce. I mean, this is just a textbook breakout into a trend on a pullback. And in fact, if I just get rid of, see, this is what sometimes you can just pollute your charts with too much nonsense. Maybe if I look at it like that, then perhaps that is a dead cat bounce entry there. Okay, the cat got hit a few times, but eventually could have been a good entry there. Okay, so yeah, you can see that the dead cat bounce candlestick pattern can give you good entries. It's very simple. It's basically trend trading with support and resistance breakouts on a pullback. Okay, so it's a bearish candlestick formation. What you don't want to do is sell too late, okay? So when you see this pullback here, you know, the trend's exhausted. You can use any fancy indicator you want, RSI or whatever you use to tell you that. But you can also use your eyes to tell you that it's oversold. Don't go looking for any more dead cats. We've had plenty along here. Okay, well, hopefully that's oh, before I forget, obviously sensible money management as well. Let's just say we took this breakout here. Stop loss was 20 pips around here. What you don't want to do, or what I wouldn't do, is just panic and get excited around here and say, oh, you know, I've made my 3-to-1 risk to reward ratio, let me take the profit. You're going to miss out on all of that. Instead, you can lock trade in at break even, use a trailing stop and close profit if you want along the way. We can re-enter if we get taken out. It's just that the more that you re-enter, the higher your chances are of getting your entry wrong, and the more you're going to have to pay in terms of broker spreads, commissions, slippage, and the more time you need to spend watching your charts. There's nothing quite like getting into a nice trend like this at the beginning, locking in some profits, locking in a trade, a worst case scenario, and you can just watch it play out and milk it as much as possible, okay? Hopefully you found something useful in this video. Appreciate if you would like and subscribe. Catch you on the next one.